Daily Energy Markets webinar, where we review the open in Asia and track the course of direction perhaps for the day ahead and the week ahead, as it is Monday morning, June 14th. Let's kick off with our regular Monday morning commentator with Omar Najia, Global Head of Derivatives, BB Energy. Omar, the march is on, clearly anchored in the 70s and moving. Anything to stop us getting to 75 anytime soon on Brent?
No. Higher.
Okay, next.
Higher. No, it's because basically now you're going to get what we call the mass amnesia, which is basically when everybody forgets, that they were bearish, it's never going to get there. Demand's never come back. Things will never get back to normal. We're never going to fly. There's no more working in the office. Everybody's going to work from home. So what you're going to see, so we've got to the level now where you got that first kind of slap in the face. And now what we're going to have is this mass amnesia, basically, where everybody who's been slapped and woken up says, we are going to travel again. We are going to go. We are going to drive. We are going to buy. We are going to have it. And that's what's going to take us up, I think, another $7, $8 higher, basically, per barrel. Up.
Over what sort of time frame would you see that move?
Well, time frame is always very difficult. You can't really, I really don't know, but I would say before the end of the year, by the end of the year, I'd be looking for WTI to trade very close, if not at $80, 80, higher. Equities higher, commodities higher, Bitcoin higher. Everything higher. So I think it's kind of that, being the markets being shaken awake. Market participants basically will start to, realize that all this talk about never again and the world's changed and all that kind of stuff is just, disappears in a puff of smoke, poof, and up we go. So I think you're going to see some decent buying across the board, basically, risk on as we head into the second half of the year. So $8 higher before the end of 2021. Bullish.
$8 higher before the end of 2021. That's, I suppose we have our friends at Goldman Sachs calling it $80 over the summer. Vandana Hari, sitting in Singapore, Director of Vanda Insights, reading your report this morning. You're mildly bullish as compared to Omar there, which has sharp horns and is ragingly bullish. Why only mildly, given obviously all boats seem to be rising fast?
Yeah, morning, Sean, and all our viewers this morning as well. So Omar speaks of collective amnesia. Let me talk about the market's blind spot. Look, I do not deny, I think it's pretty obvious that demand is picking up. I think what's happening in the US with the reopening, all the macroeconomic data in the US, everything rebounding just nicely. It's a Goldilocks scenario almost. All of that is pretty clear. I think what the market might be ignoring for the time being is the 5.8 million barrels per day of supply that OPEC, non-OPEC will still be withholding from the market as of the end of July. And some of the commentary, including I was looking at the IEA report from last Friday, seems to be, unless I'm missing something, seems to be assuming that all or most of this 5.8 will not be coming back into the market. And I think that would be a mistake to assume that. So again, I was listening to your webinar yesterday as well with Jorge and Christoph. And, again, I completely agree with the viewpoint of the Saudis managing to keep a very tight rein. But again, I think it would be a mistake to assume that Russia and the Russian Mr. Novak, will not be flexing their muscles at the next meeting on the 1st of July. So in short, I do expect that 5.8 million barrels per day to start coming back into the market, and a little bit faster, I would dare say, than what we have seen in the first 6 or 7 months of the year. So mildly bullish as a result, not a raging bull.
Okay, well, One of the things that is definitely giving this market some extra push is the fact that the Iranian nuclear agreement, which was apparently imminent and with it extra supply to the market, now seems pushed out onto the horizon a little bit. Let's welcome David Rundell, one of the longest serving US consulars in the kingdom, no longer, but was over 11 years, I believe, David. David, your thoughts on the outlook for the Iran, the sort of Iran P5 talks, but obviously all the focus is on the US. You think a deal can be done? Is this still just a protracted negotiation?
Well, let me address several issues. The first one you just discussed really was where are prices going to go. And I was on the, I don't know, a couple of months ago when your final question at the end of the day was, is oil going to get to 60 or was it, or 70 first, I guess was the question. And I was surprised to find myself in the minority, so very small minority actually, who thought it was going to go to 70. And everybody else thought it was going to go back down. I don't know if you published the results of those surveys, several months later.
Yeah. We've got records of everybody. Don't worry.
How what everybody said.
Nobody can hide.
Nobody can hide. But I was really surprised at that because, I thought even then that the price is going to get to 70 before it gets to 60. And the reasons for that were very much similar to what Omar just said about demand coming back. But I would add to that a couple of other factors, and I would agree with Omar that the timing is very difficult to predict. But there are other factors besides the return of demand. Inflation is happening, and I do not agree with the narrative that this is a temporary phenomena. You cannot print money at the rate that the central banks have been doing and not have some sort of sustained inflation, and that once the inflation begins to get hold, it begins to build into expectations. And so I'm not saying we're going to have hyperinflation, but surely inflation is going to increase. Secondly, the value of the dollar is probably going to decline. And as the value of the dollar declines, the price of oil globally increases. So both of those things are, if I would say, midterm factors. And the long term, the exit of many of the majors, at least apparently from exploration and production, will to some extent be picked up by the national oil companies, but probably not quickly and completely. And so there will be a demand that's rising and a supply that may be falling. And finally, I said a lot, Arabia Analytica did some predictive analytics some months ago now on what we thought was going to happen to the Russian-Saudi marriage. And we felt, and this was when oil was, down in the way, it was way back in, it was almost a year ago when oil was way down. We thought it would hold until oil got to about 60. And it's still holding beyond there. But I think that Vanda is right that it's coming to the end of that marriage. And so you probably will see some slippage there. So those are my thoughts on prices. The question you really asked was about the Iranian nuclear deal. Look, the Biden administration is in many ways Obama 3.0. They are fundamentally committed to, and I think it's unfair to say that they're committed to a deal. They're committed to the concept of getting Iran back into the community of nations. And they see, and they are committed to that because they would like to shift American attention away from the Middle East and get to thinking about the Pacific more and not be preoccupied with the difficulties in the Middle East. I think that's a forlorn hope. I don't think they're going to succeed in that, but that's what they're trying to do. So they will, I think, come up with some kind of an agreement. Whether it's meaningful or not, I think is pretty dubious. If you want my, I think that
Yeah.
I'll just be very quick and say, the evidence of that we've seen, we have an Iranian foreign minister who goes on a video, which he didn't expect to be published, where he says that he doesn't really control things, that the Iranian Revolutionary Guard, you know what I'm talking about.
Yeah. Yeah.
So why are we negotiating with a guy who admits that he doesn't even have any influence? We have an election, which is hardly anything but a fraud, where they disqualify 400 or whatever it is, 490 of the 500 applicants. And we have the fairly neutral International Energy Agency saying, what's this about the nuclear dust or uranium dust we found in a place where it's not supposed to be? What's going on here? So,
so there's a lot to say, but not necessarily
skeptical.
much momentum. Omar, what strikes me at the moment, I'd welcome your thoughts on, is sentiment versus tangible demand. We were, for a long period of the last sort of 6-8 months, rising on the expectation of demand, the tangible demand that would come in the second half, second quarter, and so forth. I wondered, where would you see those two things now going into the second half of the year, sentiment versus tangible demand recovery?
I don't think so. Basically, it's not that nobody looks at tangible demand. Maybe like some guy sitting in an office somewhere says that, tangible demand is this or this. But, I wish the markets were slow like a turtle and wait for tangible demand is here, let's buy it. So I think, I'd like to kind of, agree with everything that David said. So bottom line is, I think a lot of people got a lot of the, whatever you want to call it, sentiment, geopolitics, recovery, human nature, all that kind of stuff completely wrong. So, and they got it completely wrong because they were hysterical. And now basically that hysteria is dying down. So what that, and then, look at the G7 and look at what they said about, the end of fossil fuel and all the rest of it. So, and then you have the EIA saying to OPEC, you've got to pump as much as possible. So again, I like to put myself in the place of these people. Nobody's stupid. So if you tell somebody, look, we're targeting your economy, your way of making money, your, sustainability, everything. And we're going to basically completely wipe out everything that you do, all your income, all the rest of it. What would you do as OPEC? Would you say, yes, you know what? We've got these 5.8 million barrels that we're keeping off the market. We're now going to put them on the market, make sure that the price goes to zero. So basically we can have our economies obliterated by 2050. That's option one. Option two says, we're going to keep the 5.8 million off the market and we're going to keep this price going up because of inflation, because the S&P is going up, because of a Tesla now costs this much and $1 worth this much. And we're going to take it all the way to $100 plus. So what would you do? I know what I would do. And
when
in the
you
same
look
way,
at the sort of tangible hurdles, things such as we going to have an announcement in the UK today that the planned sort of next phase of their reopening is suspended for a month from mid-June to late July. This sort of recovery from COVID, the idea that, I was asked the question yesterday on the survey, the sort of sentiment view of epidemiologists that if we're not all vaccinated, nobody's safe, and all of these kinds of COVID still present, still an obstacle. What is your view of that vis-a-vis this sort of bull momentum?
I mean, I say, at the end of the day, COVID is done and dusted. COVID was done and dusted for the markets about a year ago. COVID is done and dusted. You can have it in the news and you could say, we've got to worry about this variant or that variant. If you really like to read this kind of stuff, they were telling you that the new Indian variant, apparently the symptoms are like a headache and a sore throat. So no longer coughing. So God knows what happens. But all I would say is, if you're vaccinated, there's a lot of people who are vaccinated, a lot of people who had COVID. So the pool of possible people that can get infected and transmit and is getting smaller and smaller and smaller. Now you can wait and deaths basically are mercifully falling off a cliff everywhere, except maybe for India. But even in India, they're coming off. So the question is, how long are we going to basically keep this thing going about COVID? The Europeans have opened up. The USA will open up. A lot of the states in the US have opened up. The East is opening up. And this kind of, it's like flogging a dead horse. It's dead. It's finished. It might not be kind of, zero, but as far as people paying attention to it, it's done.
It
So yes,
certainly
the
seems to
UK
be done for the markets, that's for sure.
Yeah.
Vandana, your thoughts on some of those comments? I mean, clearly China is pointing towards a slightly weaker posture than it has been, but still the forecast for GDP growth there for the year remains quite strong.
Yeah, so look, as far as we've been, it's a good thing to discuss sentiment versus the physical market realities.
Yeah.
And sentiment, I kind of agree with Omar's comments. I think we've all, as just human beings, have had enough, and we want to look ahead. I do wonder if sentiment is getting carried away a little bit. I was just speaking to an oil company client in India today, and he was saying the media is celebrating, and I suppose, high time, people want to celebrate some good news. The fact that Indian cases have dropped below 100,000, and just as a reminder, they were above 400,000 at the worst peak in May. He says, however, he wouldn't put it past the government that this data is being doctored. And also now the wave has slipped into the rural areas of the country where he reckons the actual cases are 6 to 7 times easily what is being reported. So look, it does seem like, the US does seem to have left COVID behind. I don't think Asia is quite there yet. We have had cases and clusters in Guangzhou. We've had lockdowns in districts of Guangzhou. But as I mentioned on your program a few weeks ago as well, I think Asia does have a very new COVID playbook. The governments are able to move very fast and ring fence and contain the virus wherever it has erupted. So that gives the market confidence. But at the end of the day, once US demand recovery is factored in, and I think most of it is already priced into crude right now, the incremental demand growth globally has, for the past more than a decade, come from Asia, and after COVID has to come from Asia as well. So, I would say a little bit, Asia is more of a cautious optimism. I wouldn't say Asia is completely past COVID.
Yeah, and obviously we have a big OPEC meeting coming up, and we'll see on Omar's comments. One of the biggest surprises of the year, I've said it before, David, is used to be OPEC discipline. Amazing has they've held it. But the bigger surprise for the year for me, 2021, is that US shale production does not seem to be coming back and grabbing this massive opportunity of $70 a barrel.
I think it will in time. I think it will.
Why not yet, though? What's the delay, do you think, ultimately? And when will?
Well, I think there are a couple reasons for that. And I'll be quick because I spoke too long the last time.
No, I've been known to interrupt. It's part
well, you go right ahead if I talk too long. The shale revolution was created by relatively small independents. It was taken over to a considerable extent by large independents and by the majors who actually came and started. It was interesting to watch. The majors who had left the Permian Basin 10, 15 years ago and sold many of their fields started coming back with big wallets. And the major independents, if you want to call them that, the large independents, they started coming back with venture capital money, basically from New York, without, and people like me, and we've talked about this in the past, to be perfectly honest, I was selling more acreage than I was buying during this boom period, because all these people with venture capital money were pouring into Midland, and without sounding too snobbish or snottish, whatever. I was more than happy to sell my acreage to dentists from Long Island who had no idea what they were doing. Those people didn't make much money. The majors found that shale might not be this revolution that they thought it was going to be for them. So those people are pulling back. But I think that the people that created the revolution in the first place are still there, and that in time they will come back. And the other point is simply that costs are coming down. You know, you can continue to drive the cost of fracking down. It's certainly well below
which is ultimately the sort of surprising point that there wouldn't be more grabbing this moment, and particularly as Omar indicates that prices are on an upward move. So let's go to the survey question and give the room a view on these issues. What is the biggest obstacle to Brent hitting $80 a barrel over the summer? A threat from more contagious variants, the runny noses, as Omar calls them. OPEC Plus opens the taps when they meet on July 1st. Iran, US agree a deal, or 4, none of the above. What is the biggest obstacle to Brent hitting $80 a barrel over the summer? That's my question to the room, and I'm going to press one, and I just did. Omar, we're on a Monday here. We've closed, continuously in an upward motion the last few weeks. What does this week look like for you from the sense of traffic? We're back. We've got a Fed meeting midweek. We've got, I was going to say Trump meeting Putin, but we've got Biden meeting Putin. Your thoughts for the week ahead?
So I'd be looking for WTI to get to 72 and change. If it does, then the next target is going to be $78, $79. I think it's going to get there before the end of the year. Pullbacks or dips. Biden, Putin, nothing new because the US really has nothing new. Russia is already, with China, that's not going to change. The G7, they can say whatever they like, but the world's moved on. China said that, the days of, the G7 deciding what the quote unquote rules-based system are is well and truly finished. So they can talk amongst themselves. That's fine. And at the end of the day, with COVID, the only thing I'd say that if basically, since a lot of people had COVID, since you've had all these vaccines, if you still are not convinced that it's the end, then nothing is going to convince you. And we're going to basically it's going to be, whatever it's going to be. So as far as I'm concerned, the COVID question, which is the only real thing that's brought up in terms of, because everything else from, inflation to the backdrop of economies, in other words, mass liquidity, growth, trying to overheat economies, all that stuff is positive for oil and commodities. But the only thing that keeps being brought up repeatedly is COVID. So if vaccines doesn't convince you, and the fact that so many people have had COVID already, then basically nothing will. Then basically you might as well, every time anybody's asked about his opinion about anything, say COVID until basically cases are zero. That's it. Higher.
Bandar, your thoughts for the week ahead? Inflation seems to come and go. The Fed are meeting this week. It seems in some ways the markets are starting to believe the Fed's position. We're not going to interrupt this. We're not taking the punch bowl away, but the punch swimming pool.
I think crude will continue grinding higher this week. There have been headwinds in the past few weeks in this duration of the crude's rally, which have come from the financial markets jitters over inflation. And we saw through last week, despite the red hot retail or the CPI data from the US, the market kept its cool. That could very much continue through the Fed meeting this week. Just adding on to my point earlier about OPEC, aside from the internal tensions and Russia's dovish approach, I think OPEC Plus will need to ensure that they don't lose the market share as demand returns. And while you might argue, but wait, shale is not going anywhere. It's down from 13 to 11. I would ask you to take a look at US crude exports. And I think that is what OPEC Plus needs to keep an eye on instead of simply how much the US is producing. Let me give you very, very quick numbers. The US exported about give or take 3 million barrels per day of crude on average in 2019. In 2020, it exported 3.2 million barrels per day. And these are figures from the EIA, so you can take them as they are. In 2021, the first 3 months, it's exported 2.85. So it's come down from 3 million barrels per day in 2019 to 2.85 million barrels per day. The latest week, US exported 3.7 million barrels per day. So yes, they're producing less, but then they're using much less of their crude at home, and they're exporting. Where are they exporting to? To places like China, India, Asia, and of course to Europe as well. So something OPEC will need to. There'll be internal tensions. Leaks might start happening if indeed there is the demand growth and prices are high. Do we really think OPEC Plus producers are going to say to their buyers, no, I will not give you the extra crude? Of course they will. So there will be internal leaks. Plus there will be this tension versus shale and Norway, Canada, they are all going to increase as well. So, another reason I feel OPEC will start opening the spigots.
Let's get the survey result and give David a last word this morning. What is the biggest obstacle to Brent hitting 80 over the summer? OPEC opening the taps at their July 1 meeting, and a little bit of contagion from COVID and a little bit of Iran-US. David, it's sort of ironic, perhaps, that we end in this week. We will see in the same week a new leader in Israel for the first time in 12 years and a new leader in Iran for the first time in, I think, 8 years, the cycle there. But ultimately, new leadership in both countries. Your thoughts on the geopolitical posturing of that? Does it have any relevance? Will it change the sort of trend line of anything in the region? Of course, Saudi Arabia sits in the middle of both of those.
No,
David.
the answer is no, I don't think it will. I think that the rigged election in Iran is a foregone conclusion, and the person that they chose is handpicked by the supreme leader to continue the policies which he has established over a long period of time, and probably to anoint this new president to be his successor. This is somebody who was, if you will, the Robespierre of the Iranian Revolution, who's committed to the revolution, to its ideals, to its anti-Western ideology, to its anti-Israel ideology. So I don't really see that anything that's going to change. No.
Well, what about?
I wish I could say something. No, I wish I could be a lot more positive. I'd like to say yes.
What about on the Israeli side? First time in Arab parties in the Israeli government?
I think we have to wait and see how long this government survives. I mean, it is a cobbled together by a lot of people who have nothing in common except that they wanted to get rid of Netanyahu. So where that government's going to go is anybody's guess. I mean, it has no coherence, is what I'm saying.
That coalition might be extending way beyond just the political parties of Israel. The get rid of Netanyahu parties might include the White House and others, but nonetheless, that is an interesting coincidence that this week.
Oh yeah, it is interesting. Yes, definitely.
And right in the middle, of course, are the sort of, I think, 6th round of Iranian talks underway in Vienna. Whether they'll deliver over the coming days or not, we'll have to wait and see. But we'll wrap it up there. It kicks off Monday. Markets opening upwards in Asia. The trend continues. Omar's got to get back to making money. Thanks, Omar. Really appreciate your insights. Vandana, thank you. David, thank you very much for your contribution. And thank you, everybody, for joining us. We'll catch up with you in the coming days. All the best.
Thank you.
Take care.